we are already losing ground. Michiel Eilts of Equinix has delivered a stark warning about the data center landscape, revealing how zoning concerns in Amsterdam are forcing massive shifts in global computing power. Eilts tells us why the city's decision to halt new data center construction is impacting major investments and what this means for the future of digital infrastructure. Governor Kelly Ayotte weighs in on the complex local issues facing New Hampshire, discussing her opposition to large-scale data centers alongside other major legislative battles. Don't miss this full breakdown. Stay tuned for the rest of the news. Data centers are facing a critical infrastructure crunch as demand for computing surges, leading to significant development hurdles in key European locations. Michiel Eilts, who has led Equinix's Dutch division for 17 years, warns that the industry is already losing ground due to municipal bans and zoning concerns limiting new construction. Eilts highlights the rapid shift in the IT landscape, noting that the democratization of IT means that failing to keep pace with new technologies poses a growing threat to businesses. He observes a stark reversal in sentiment in Amsterdam, where enthusiasm for data center construction has been replaced by municipal decisions against new builds. When questioned about the rationale for not building new facilities, Eilts stressed that the motivation is pure demand-driven, not preference. He pointed out a systemic planning failure, stating that national spatial planning reports fail to account for essential infrastructure like data center space and fiber connections, comparing it to building a house without planning an internet connection. Addressing concerns about grid congestion, Eilts framed the high-voltage grid as an intercity network and local distribution as a bus service. He argued that data centers can actually enhance grid stability by providing backup power solutions, including battery storage and diesel generators. On environmental and spatial concerns, he countered that data centers occupy less space than logistics warehouses and consume significantly less energy per unit of capacity compared to other industries. He questioned the focus on water usage, suggesting it might be more relevant to other sectors. Regarding European digital autonomy, Eilts expressed skepticism about achieving full self-sufficiency in the short term, citing dependencies on American technology across the entire tech stack, from chips to AI frameworks. He suggested that Europe should pivot investment toward areas where it possesses world-class research, such as quantum computing and photonics, to establish new global dependencies. Despite geopolitical concerns regarding data jurisdiction, Eilts noted that established legal frameworks exist, ensuring data compliance. However, he acknowledged that disentangling from U.S. technology in the short term is unrealistic, suggesting a full-stack European alternative could take a decade or more. Eilts concluded by emphasizing the immediate priority, meeting customer capacity needs. He stated that the Netherlands is rapidly losing its status as a technology hub, as major Dutch companies are shifting its workloads to Germany and France, pushing the country's data center network down the rankings as Paris and Dublin overtake it. Europe's ambitious push to lead the artificial intelligence race against the United States and China faces a significant threat from soaring energy prices, experts warn. As the region accelerates investment in compute capacity and critical infrastructure for AI, the high power demands of data centers are making these projects acutely sensitive to energy costs, which are surging amid geopolitical tensions, such as the US-Iran conflict. Analysts suggest a major shift is underway, with data center projects likely migrating to parts of Europe offering lower power rates, creating winners and losers across the continent. Michael Brown of Franklin Templeton stated that the global disparity in energy costs will become extreme, predicting that energy-intensive investments, like a potential $7 billion data center, would gravitate toward the US or China. Olivier Darmoni, an associate professor at HEC Paris specializing in the energy transition, highlighted that rapid data center growth could inflate regional electricity costs by 20 to 40% in hotspots like Texas, Virginia, SLU, and Paris. He framed AI as a wake-up call, demanding a focus on energy systems as a matter of economic sovereignty, arguing that affordability and energy stability are prerequisites for technological leadership. Data from the International Energy Agency indicates that energy prices for intensive industries in Europe roughly doubled in the US compared to China and India. Furthermore, data centers now consume 2% of global electricity, up from 1.7% in 2024. The International Data Center Authority, IDCA, report noted a tipping point. Community and political resistance intensifies when data centers exceed 5% of national electricity consumption, a threshold nearing for the US and UK. Chris Sapel of Wood Mackenzie identified 3 primary reasons Europe lags in data center development: energy costs, geographic location, and speed to market. Vladimir Prodanovic of NVIDIA pointed to high electricity costs in Germany and the UK as major deterrents. While the Nordics and France are seen as potential beneficiaries due to lower electricity costs and diverse energy mixes, Darmoni stressed that lower prices alone are insufficient. He called for greater integration of transmission, lighting, and storage across national borders to ensure uniform energy pricing. He also noted that geographical factors, such as the difficulty of integration in the UK and Scandinavia, and supply-demand imbalances are increasing development costs, with the cost of securing capacity in Europe's 5 largest markets projected to rise by 12% in 2026. In response, major tech players are pivoting toward favorable energy markets. Microsoft is heavily investing in the Nordics, with significant deals planned in Norway, Sweden, and Denmark. Furthermore, the potential for AI services to introduce pricing mechanisms is anticipated, with customers potentially facing higher costs in regions like the UK due to energy expenses being the marginal cost of providing these services. Iron Mountain, IRM, has recently recalibrated its investment narrative following strong financial results, emphasizing growth in its data center leasing segment. The company reported revenue increases exceeding 20% and a significant 47% year-over-year jump in data center revenue. This performance supports the near-term growth catalyst driven by the data center sector. IRM raised its 2026 revenue guidance from US $7,825 million to US $7,925 million, driven by a strong first quarter and 32 megawatts of leasing secured through April. While this upgrade aligns with the digital growth trend, it also serves as a reminder that ambitious growth targets necessitate sustained heavy investment and careful management of the balance sheet. Despite the positive outlook, analysts caution investors to monitor the impact of increased leverage and capital spending on Iron Mountain's long-term stability. The company projects revenues of $9.1 billion and earnings of $776.1 million by 2029, requiring a 9.5% annual revenue growth rate. More optimistic analyst projections suggest a path toward $8.8 billion in revenue and $905 million in earnings by 2028. Iron Mountain remains a global leader in information management services, serving over 240,000 customers across 61 countries, though the stock carries a slight risk profile with moderate growth potential. New Hampshire Governor Kelly Ayotte is intensifying her opposition to the development of large-scale data centers, citing the high cost of energy as a primary driver for her stance. Ayat's legislative agenda is multifaceted, encompassing several contentious issues currently under debate in the state's legislature. In addition to the energy concerns surrounding data centers, the governor has also addressed public health matters, specifically referencing the recent hantavirus outbreak and the state's connection to a cruise ship where infections were reported. Furthermore, Ayat is actively engaged in discussions regarding judicial accountability, pushing for measures related to the accountability of judges. Finally, the governor is also vocal in her opposition to proposed bills related to transgender issues that are currently being debated within the state government.